everybody, Mark here with the STR Investing Podcast. I am your co-host, and this week I'm bringing you another Monday morning market data report. If you've listened to this series, you know that every week on Mondays we break down the short-term rental data for specific markets all around the country, whether you are looking to invest in that area, whether you are a traveler, or whether you already own a property in that market. This can be a great information to help you figure out if it's profitable or how your properties are performing against the general market. And this week is no different. I'm bringing you one of my personal favorite markets to travel to and visit to, and it's Blue Ridge, Georgia. It's a very cool place. There's great food. There's a slow train that rolls through the hills that's kind of fun to take your kids on. If you haven't been, you should put it on your list. If you're considering investing, let me tell you what the data tells you. Let's get into it. 3 bedrooms in Blue Ridge, Georgia. The average properties in the 3-bedroom category are making about $38,000 a year. However, the top performing properties, the top 10%, are making $68,000 a year. So there's a very large swing from average properties in Blue Ridge to top performing properties. Obviously, that's going to have to do with location, view, amenities, design, things like that. But you've got a pretty big swing between the average and the top performing homes. That is achieved by an average daily rate starting at $240 for the average properties. Average homes are bringing about $240 a night. Top performing properties are bringing $360 a night. So about a 33% jump on an average daily rate. And then our occupancy is really where we see a big swing. The average 3 bedrooms are getting booked out at 44% a year. The top 10% homes are being booked out at 68% a year. That's one of the largest occupancy swings I've ever seen in any market. The daily rate is kind of average as far as how it jumps from the normal properties to the top performers. But the occupancy from 50% 3 bedrooms to 90% 3 bedrooms is a huge swing. And then when we get into the 4 bedrooms, the average homes in 4-bedroom category make about $44,000 a year, which is a small jump from 3 bedrooms. That's only about a $6,000 swing, which is one of the smallest jumps I've ever seen from a 3-bedroom to a 4-bedroom. I know that there's, a lot of couples that travel to Blue Ridge and things like that. So that might be a reason why the 4 bedrooms don't drastically outperform the 3 bedrooms on the average. But if I look at the top performing 4 bedrooms, they make about $85,000 a year, which is about a $17,000 or $18,000 swing versus the top performing 3 bedrooms. So if you've got a top performing 4-bedroom, it can definitely be worth it. Those top performing 4 bedrooms are making a little over $40,000 more than the average performing 4 bedrooms. So a huge swing in how your home performs in that bedroom category. Not a drastic swing from 3-bedroom to 4-bedroom. Those average daily rates for 4 bedrooms start at $320, work their way all the way up to $504, a little over $500 a night. The top performing 4 bedrooms occupy out at 62%. The average performing 4 bedrooms have an occupancy of 37%. So that's interesting to see that from a 3 to a 4, we actually see occupancy go down all across the board, but the 4 bedrooms earn more depending on how your property ranks in that category. Then we jump to the 5 bedrooms. There's a pretty big swing here. So from the 4-bedroom to the 5, on the average performing homes, we go from $44,000 all the way up to $62,000 a year on 5 bedrooms. The 90th percentiles, they earn as much as $130,000 a year on the 5 bedrooms, which is the largest swing I've ever seen from an average 5-bedroom to a top performing 5-bedroom, and then from a 4-bedroom top performer to a 5-bedroom top performer. You're gonna do twice as much revenue having a top performing 5-bedroom than you would if you had an average 5-bedroom. And you're gonna do twice as much revenue if you have a top performing 5-bedroom than if you had a top performing 4-bedroom. So that's a really interesting statistic here, guys. Average daily rates start at $469 for the average 50th percentile 5 bedrooms and make their way all the way up to $714 for top performing 5 bedrooms. Occupancy is similar. It actually dips a little bit on the 5 at the top performers, but goes up a little bit on the average. Pretty interesting. 5 bedrooms on the average occupy out at 43%. Top performing 5 bedrooms occupy out at 61%. So occupancy for average 5 bedrooms is up versus average 4 bedrooms, but occupancy for great 5 bedrooms, top performing, is down from great 4 bedroom, top performing 4 bedrooms. So that's pretty interesting. We know that when your revenue goes up and occupancy goes down, you're keeping more money in your pocket. You got less turns, less cleaning fees, so on and so forth. 6+ bedrooms. The biggest houses in Blue Ridge, what are these things doing? On the average, they're doing $124,000 a year in revenue, which is a little bit less than a top performing 5. At the top performing 90th percentile, these 6 bedrooms can earn as much as $275,000 a year. So if you've got a large, great short-term rental in Blue Ridge, you can earn well over $250,000 a year. Those are always the crown jewels, the gems that people always like to brag about. Daily rates for 6+ bedrooms start at $729 and work their way all the way up to $1,283. So a pretty high daily rate. And then occupancy goes from 48% to 63%, depending on how your 6+ bedroom performs. That's pretty standard from kind of what we've seen. Occupancy is very similar across the bedroom categories for Blue Ridge. Guys, I hope this was helpful. If you've got any questions, if you've got any markets that you're interested in, give us a shout. We've got a great guest speaker for you this Friday. So make sure to like, subscribe, share this episode, and be ready for this Friday's guest speaker. Excited to have you guys as part of the STR investing community, and we will catch you this Friday.